The toil and the grind continues for Indian markets, which have now corrected for the sixth day on the row now and have plunged to a fresh 2.5-day low. At the time when global markets are moving from strength to strength, Indian markets are languishing due to poor news and because of strong paper supply. More than large cap stocks, there is intense pressure in mid and small cap stocks. High beta stocks have corrected and there is no marked improvement in market breadth. So is it a good time to buy into this decline? We'll discuss that for you in this edition of Markets Tomorrow with Vikas Khemani. He represents Edelweiss Equities. Along with him, we've got Sandeep Wagle to give us a better understanding of the technical setup, and we'll also connect with Sudhir Bandyopadhyay, Managing Director and Chief Executive Officer of Testimony Securities. Gentlemen, good evening to all of you, and thank you for joining us. Sandeep Wagle, if I look at the Nifty, if I look at the Sensex, it's not a carnage. But the minute I look at the mid-cap index and talk about high beta stocks, I guess there is a lot of pain out there.
Nikunj, absolutely right. I mean, I would agree with your statement. And the Nifty, though it has broken that crucial level of 5950, it is marginally broken that by 12 points. And very easily, we can get a 30-40 point up move in case one wants to sell into. I am not very clear as to whether I should initiate a sell now or wait for some more time, some more evidence, because the markets or the Nifty is in extreme oversold zone. So a bounce back can trigger your stop losses. I mean, if at all I take a sell call, that will be around 59,86,000. That will make me more comfortable. So I would wait for another day. And I still feel stock specific, there are a lot of opportunities, more so on the sell side. That is where what you said, I agree with you.
Sudeep, when we started the year 2013, there was a hope. There was a hope that 2012, the rally of 2012 will extend itself. But if I look at the broader setup, global markets are moving from strength to strength, but Indian markets are now languishing at a 3-month low.
Well, Nikunj, I think still there is hope. I don't think we need to lose hope yet. The finance ministry has been taking a lot of action. There has been, a lot of, corrective steps on the fiscal front. So I think there is something to cheer about. But yes, the markets have kind of corrected significantly, and there are valid reasons for that as well. Look, the GDP numbers which are expected, the way the Indian currency has behaved, forget the last about 10-15 days, the way the PSU banks have posted their numbers, the asset quality concerns. I think there are reasons to take some profit out of the table, and that's what the investors have been doing. But I don't think people have lost hope. FIIs haven't lost hope. Domestic investors haven't lost hope. Look at the kind of subscription today NTPC got. Look at the kind of subscription which a couple of other OFSs also got. And look at the buying which we are seeing in lots of private sector banks. I think there is still hope, but in select counters.
Hope, Sudeep, that's the disturbing part, that there is a lot of hope. And I think hope sometimes could backfire. It has backfired so far this year. Sudeep?
Well, yes, Nikunj, it has backfired to an extent, but our view has been that you need to be counter-specific. Like the banking space you are talking about, we have been very clear for the last 6 months that if you have to see value, continue searching value in private sector large cap banks. Don't go for value pick in PSU banks. Till the economy recovers, you cannot assume that public sector bank asset quality will improve. So I think some of the value plays or some of the sectoral shifts which were being recommended or being taken, like infra, capital goods, I think they were a little premature. We still have a long way to go before you can see value in them.
Vikas Khemani, let me also encourage you to jump in here. To your mind, what has really precipitated this round of correction? Poor earnings, bad macro, or the global setup?
I think, Nikunj, it's a bit of everything, because I think, we had a supply of good news, which was as I think whatever government was sort of promising, that continued to deliver. So as an event takes place, you sort of see profit booking coming through. And I think after a sharp rally, always I think there's a tendency to book profits. And when we see lots of paper are still coming through, and I think there's a good lineup till in next 3 to 4 months. So I think there is a tendency to do a little bit of switch from one stock to other stock. So I think a combination of all these things, I think in my opinion, is taking leading to this. And I don't think, given the supply of paper coming, you will see a steep rally sort of taking place even, post-budget. So I think we have a reasonably large supply of paper coming through, and that needs to be absorbed. And I think it all depends on what kind of inflows we see, whether it matches or it sort of exceeds significantly. And that, I think, going to hold the key.
The big story today was NTPC. The OFS has got a jumbo response, a jumbo side OFS, and it has got a resounding response. What we understand is that the OFS is fully subscribed. Most of the bids, they came at the higher end, and this is some kind of an indication that if you price a good quality paper smartly, you will always find you will always find some takers. Because the good news is that NTPC has come and gone, and it has not disturbed the market equilibrium. But the bad news here is that NTPC is a utility company, and most of the money managers, they consider utility companies as a utility business rather as a boring business.
And maybe that is where the opportunity lies, because I think you will be surprised to see the boring businesses end up giving more returns many times. So. But as I say, I would tend to think that if you get boring business at the right valuation and with low volatility of the returns, I think probably that's a perfect stock from a investment perspective. So I do like the stock at this point in time, frankly. And you have a good growth coming in over the next few years. So you have most of the things in your favor. And I think if the government has to continue its reform process, the power sector reform has to happen. And I think, in my opinion, you will see some activity happening on the power sector in the next 3 to 6 months that could act as an additional trigger for the stock.
Sudeep, what to your mind could be the near-term upside for NTPC? I mean, 145 cannot become 200 very soon because the business is not growing, and ultimately it is a utility company.
Well, Nikunj,
so what's the carrot there?
I think the biggest carrot is NTPC is the best and undoubtedly the leader on the power sector. If we are going to bet on Indian power sector, and believe me, there are enough reasons to bet on that, I think NTPC should be your pick. Even without this OFS, we have been bullish on NTPC for some time. They have got the best efficiency amongst all power plants in India. They have got probably the best backward and forward linkages, whether it's coal supply, whether it's the PPPs with the state electricity boards, and favorable terms too, because they have been the oldest and the most efficient power producer. So I think there is enough reason to buy NTPC even otherwise. Of course, as was being mentioned just now, some of the power sector reforms which are expected in the near future, that will act as a next trigger, which can take it to definitely 200, the figure you are mentioning.
Strides today corrected on very strong volumes. It started at 1056, came down to about 868, closed at 916. Sandeep Bagle, a scary fall and a very scary fall.
Nikunj, absolutely right. A very scary fall in the sense that not only it has damaged the daily pattern but even the weekly pattern, and even after such a big fall, which is almost 12-13%, I can talk of a lower target which is to the tune of around 800-810. So in case at a current level of 916 you may not be comfortable selling, but 930-940, that range if you get in, take a 20-25 point stop loss and play for a target of 810 to 800.
Sudeep, Strides, what's the way forward?
Well, I think the deal is some deal is definitely in the offing. The rumor which you talked about has been also heard in the market that Pfizer deal has been shelved for the time being. Probably the deal will come back in some form or the other in about 5-6 months time. So there is of course a lot of concern among investors, particularly who had used borrowings to finance their acquisition of the shares, just to make a quick buck. I think the problem is there, and I think that's where there were a lot of margin pressures and selling on account of that.
So in the short term, it's a flip of coin, which way the stock will move?
Not really. I think we have seen the correction, whatever had to happen. From here on, I won't be surprised if it starts inching upwards once again.
So don't panic and don't sell.
Absolutely.
Okay, Vikas Khemani, there is definitely some panic unwinding which is visible in consumption names. First it was HUL, then it was Colgate. 3 days ago it was Jubilant FoodWorks, and our specialty foods has indicated that Indian consumer is slowing down. Are you a bit worried about the kind of management commentary we've got from some of these consumer names? And as a house, are you bearish on consumer names or bullish on consumer names?
Absolutely, and I think, you know, A, they are experiencing slowdown, and secondly, they are trading at a rich valuation. So I think obviously there was a dream run which for them last year, and I think I think large part of the valuation also was driven out of the fact that a lot of money went into defensive from the high beta, and as the environment is turning back, you know, you will see the trade of, you know, high beta long and sort of defensive short or underweight, and I think that trade also will hurt. I mean, not to say that, you know, I think businesses are slowing down. Secondly, I think the money also will go out. So I think both these sort of factors would definitely harm the consumer sector, and I see, you know, probably from this whole of this year, consumer to remain underperformer, and I think probably give there is a possibility that they might give negative return as well.